Welcome to Analyzing Finance with Nick. Today, I've got a special guest to break down the jobs numbers with me. I have Damon Cassidy from the self-named YouTube channel, Damon Cassidy, and his specialty is the labor market. He has built his channel on analyzing trends in the jobs market and what they mean for everyday people. And in this video, I'm going to do an extensive breakdown on how the non-farm payroll numbers, unemployment rate, and all the jobs data that comes out the first Friday of every month is calculated and why it matters both for individuals and investors. And let's just first start with basics, Damon. What is the jobs report? What is it exactly calculating?
Um, well, if we're the most popular number is typically going to be the unemployment rate, which is important because while you would think that it's you either have a job or you don't, and that's how it's accounted for, it's actually much more complex than that. The Bureau of Labor Statistics sends out what's called the CPS, or the Current Population Survey. And what it does is it goes to 60,000 households in the United States. Approximately 110,000 individuals will be the data pool that they get off of that. There will be a trained BLS officer that is going to ask them questions without saying, "Are you employed? Are you not?" So it's very difficult to understand what data are they going to get off of you. Again, like I said, what you're going to think is, yeah, I have a job. No, I don't. I'm not. I'm employed or I'm not employed. Say you own an ice cream stand and your 16-year-old kid is about to go to college, and for you to feel like you feel justified to pay for college for them, you're going to have them work weekends. Um, they work 15 hours. You don't pay them anything. Um, they're considered employed to this officer. So they're now, in the eyes of the government, they are employed. Say that you have a flower shop and your retired grandparents are helping and they're collecting Social Security and their pension. They haven't worked in 20 years. They help you for over 15 hours. They're employees now. So that's two more employees if you consider a grandpa or grandma. Say you are entirely unemployed. You're going through your savings. You haven't had a job in 6 months. If you went and you worked for your friend for 20 minutes and they gave you $1, you're now considered employed. And so it's very counterintuitive to what we would think. Unemployed is also not as straightforward as you would think. Unemployed is only considered if you have actively looked or participated in looking for a job within 4 weeks. So, say that you had some interviews planned for the month, they ended up not going through, you end up getting sick, and then you go stay with your parents for a bit and you just kind of try to refigure out your job and create a plan. You're now considered not participating in the labor force. So you're not even included in unemployed numbers. And I think that that's very difficult to fully wrap your head around, because when we consider the unemployment rate, that's calculated as U3, and that's just people not participating in the labor force by looking for a job within the last 4 weeks. But there's so many subcategories that should be considered as well, such as individuals that are discouraged. And in my opinion, what I discuss a lot about on my channel is ghost jobs. If you have spent, say, 2 3 months and you applied to 100 200 different jobs and you got ghosted by every single one of them, what is most likely going to happen is you're going to become discouraged and you are going to want to feel like you're going to give up on the labor market. You're going to go do something different. This just isn't working. You're considered not participating in the labor force. You're not even considered as a part of these numbers if you go through the U3 route. You also have marginally attached. Those are individuals that have looked for a job within 12 months, maybe have had a job within 12 months, just not within the last 4 weeks. Again, not considered in the unemployment numbers that are reaching the headlines. You also have individuals that are needing a job. This I apologize. I'm going to go back to those that are considered employed. With regards to part-time work, you would think that part-time is just considered part-time regular. Part-time is only considered employed if it's non-voluntary, which is mostly you used to work 40 hours and you got pushed down to having to work under 40 hours because of your employer. That does not consider if you are someone that's retired, the price of groceries has gone up as much as it has, and now you're having to go work at the local CVS to be able to afford something. You're just now considered employed. It's not considered as an impact of the economy. So when you consider a lot of this different data, you can begin to see that a lot of this can get misrepresented of what I believe is actually happening, a part of the labor pool, especially when you have numbers that get reported in a survey. It's the best that we have, but it's kind of like we're trying to be as efficient as we can with a broken system.
The question I have is like, who do they pick for the sample size? I don't think I've ever been called by the BLS to ask about my job status. I don't know if you have. Um, like, how do they find who they're surveying for these things?
It is totally random. It's just out of, I think that they have addresses or something. I don't know how they actually find you, but it's just entirely random. So they're just going to
And like,
60,000
what's like
different
the
households.
sample size right now?
They do, the CPS is 60,000 American households, which accounts to roughly 110,000 Americans that you're getting off of the survey.
So then that explains the unemployment rate. Where what about the non-farm payroll number that comes out every month?
So just like the CPS, the Bureau of Labor Statistics also interviews or sends surveys to companies. They send it to 21,000 companies with a survey called JOLT. So it's Job Opening and Labor Turnover Survey. What this does is it's asking employers, are you actively trying to hire candidates? Who has been laid off? Who has left on their own regards, to be able to get an understanding from these companies of what is happening on a job creation standpoint. The unfortunate thing, and I've criticized the Jolt quite heavily, is that as it does go to 21,000 businesses, as of 2017, it was about 16,000 businesses would respond to the survey. Currently, it's 6,000. It's 6,300 roughly, I believe. When you equate to the importance of, say, the survey that Americans are receiving, that's such a large cohort of people. While it is still flawed, it at least gives you a stronger, better understanding. If you have 6,000 companies that are answering this report, there's no way that you're getting an actual understanding of what is happening in terms of job creation. Also, it's very lenient on the definition. So if you say, have you, a job opening is, could you hire for the position? Most companies could hire for an open position. Are you actively trying to put that out, which could be as easy as putting out a fake job, some newspaper article, something like that. It could be as easy as talking to your friend of saying, hey, I'm hiring. If you told that to a BLS officer, they are going to say that you are actively trying to hire somebody. And could they start within 2 weeks, I believe is a data point there. So when you think about it from a employer standpoint, all of those are easy yeses, because there's not really any, it isn't hard to say, yeah, I could hire for someone. Yeah, I talked about it to somebody. And yeah, I mean, they could start within 2 weeks, but they could also start within 3 months, or they could never start. Um, so when you look at the JOLT data, it really is a very inefficient metric that the labor market uses to measure these certain aspects, specifically in regards to the fact that they said that they only have 90% confidence in the data. When you consider something that has as much importance in the economy as these datas do, you would hope that it would be more than 90%. And that gets us to, when you see 818,000 false jobs reported, a lot of this comes from inefficient systems that we continuously say is the best we have, which I think in some regards it is, but it's because we're not actively trying to make it better, which is,
Yeah, there are some private sector ways to attempt to do this, like ADP on the
yes.
Wednesday of jobs numbers tries to show its payrolls, and it lines up mostly, but the fact that the difference in like government hiring often accounts for that, and also just again the inefficiency in how this data is collected. Like it's not, you say it's just more of a survey, and it's not just they're counting how many people have been hired versus fired and subtracting the difference. Probably just because given how big our country is, it's probably impossible to track every single one of them. But
Well,
it's
another important thing is you would think that with data that is important as this, that there would be repercussions for falsely reported data. I have talked a lot on the channel about the incentives that companies have. And this is, again, we're talking about larger companies or medium to larger companies to create fake jobs. So if you have the ability to be able to write off a job posting. You have the ability to collect all of the data for every single applicant and sell it to third party data harvesters. You have the ability to, in some ways, benefit from government subsidies. You have all of these different aspects that you can benefit quite substantially off of creating fake jobs. So when you consider it that way, I think that the integrity behind the answers of these employers with the Jolt data needs to be questioned. Um,
but I mean, I would point out, like, I know ghost jobs are a real issue, but isn't the payroll data actually count what people who are actually being hired, not just listings?
yes, which is what I ultimately what I'm saying is that the non-farm payroll data is a better representation than this Jolt number. Um, there's so many different categories that they use, and that's why the revisions are so important at the end of the year. And yes, revisions happen every year, but when you see one of 818,000, that's the second highest we've had in the last 24 years, with the leading one being at 902,000 in the 2009 recession. That we need to begin to question what is the efficiency of the systems we have to balance, because I think people are going to look at it in a political sphere. This also happened in 2018, 2019, where there was 500,000 jobs falsely reported. But even still, an extra 318,000 when you have such a emphasis behind a lot of individuals saying that the labor market is very strong. Um, I think that there needs to begin to be some sort of revisions on the system itself, because this is
Yeah, we'll get into the
yeah.
political history of job revisions later in this conversation. But first, I want to just explain more just the mechanics and how this all this works. And there are several adjustments that we need to talk about. Like it's not really simply just them counting and putting that number, because the jobs numbers are volatile because the economy is volatile. So there's certain demand more in certain seasons for seasonal type of labor, and that's the first major adjustment. So how do the seasonal adjustments work?
Yeah, and that's a really great point, and I think that it's a beneficial thing to consider when you consider, say here in Texas, our summers get hot, and I guess it would be better for a state that has actual seasons. But if you are a construction worker, there's a higher likelihood you're not going to be working in the dead of winter. So that's going to be trends that are going to consistently happen. Typically, service related industries are going to increase during the summers because you'll have high school and college students working, and you're going to see another substantial drop off whenever individuals go back to school. These numbers are really important because it would make a month look really bad, or it gives us a better understanding of what happens just as a natural byproduct of the seasons, of the nature of work itself, of other cultural things that occur. So to be able to have a revision with seasonally adjusted data is very important for us to be able to get a congruent amount of data through multiple years.
And how is that calculated?
Um, it's some sort of I would have to show the graph. It's like called like XLP or something like that. I don't know the actual way that they calculate it.
And then the other major adjustment, which I'm going to go elaborate on, is the birth death model, which is probably the most controversial of the adjustments to the BLS data for calculating monthly employment changes. The birth death model aims to account for employment changes due to new businesses opening or closing. And that's what birth death. It doesn't refer to like demographics like young people entering the workforce and old people dying. This is more to do with business creation. And the government tries to estimate how many new businesses are going to be created in a given year versus how many are going to shut down for various reasons. And it shows similar seasonal patterns as the seasonal adjustments. And they update it quarterly based on the most recent 5 years of net business formation. And it can add and subtract a material amount of jobs. Like in the past 12 months, you've added 1.35 million jobs to the payroll estimate because of the birth death model. And the birth death model has been a major part of what is considered the job growth over the past 12 months because we've had approximately 2.75 million jobs created between June of 2023 to June of 2024. And a little less than half of those are credited by the birth death model. And the main real criticism and the limitation, really, which is I think, is that this is heavily subjective, this birth death model. And there's really no way for them to have a really accurate idea of how much hiring a new business should do, especially with technology the way it's advanced. You don't need to hire as many people to run the same kind of company that you needed to 10 or 20 years ago. And as a result, it's likely overestimating the new hires created from business formations. And a lot of economists would argue that it's actually hiding a structural underlying weakness in the economy, and it tends to lag on major turning points in the economy. So, like if you have a recession coming up, the birth death model is not going to factor in that a lot more businesses close than open when the economy is under stress, and vice versa. Like when you're starting to see economic recovery, the birth death model is not going to capture that more businesses are going to be opening rather than closing. Based on what I described to you on the birth death model, what are your thoughts about that and how it impacts the job analysis?
I think it's really interesting. I hadn't heard about it before. I would need to do a little bit more research on it to give you like a real thought on it, but I think it makes sense. I think that we need to begin to look at alternative measures because I believe that there is a lot of structural inefficiencies in what is happening with the labor market. I think there's a lot of things that are not being accounted for. And um, I just personally cannot find how you have a job report like we did last month, showing that the labor market was back on fire again. That doesn't make sense to me, especially when I don't know if you go out into the real world, that's not a reflection of what these data points are providing. So I think that there is something that needs to be looked at in another manner.
There are some examples of inefficiencies not only being negative, but also on the positive side, such as the way that sole proprietors or self employed are not counted entirely in at least some fashion the jobs numbers. And that could show possibly more people being employed. Or there's a lot more people who are retiring younger because they're able to save money faster because there's a lot of successful entrepreneurs who are not really classified as employed, even though they're not really struggling. Or people, thanks to the stock market going up, you have a lot of older people who are able to retire at younger ages and will not need to go back into the labor force, and they're not counted as employed. Or people who own a bunch of real estate and manage that, and they're not really counted as employed. So it's not always doom and gloom in terms of the revisions to the point that I'm trying to make.
Yeah,
And
absolutely.
so we just to have some context, but in general, I think that the way that these numbers are constructed is flawed. And the question I'm going to get to next is why is this explain why there's such a wide standard deviation? Like economists have very big gaps, like hundreds of thousands of jobs oftentimes is the expectation between plus or minus one standard deviation for what the consensus estimate is on a monthly jobs report. Is it because of how this data is constructed is why there's such a wide variance, or is there something else going on?
Yeah, absolutely. And there's a lot of human error. Um, Even when you look at the ADP that you mentioned, they will have months where they are extremely far off from what the BLS is reporting to. It's just a nature of not being able to have accurate real-time representation, and that we're still dependent upon human answers. I think that if you had a lot of other alternatives that economists and other individuals have recommended, is what I believe would be eliminating or would be getting rid of personal freedoms that you have. I think it would be encroaching it would be taking over what freedoms you have as an individual. I think what we need to do is try to find a way to have an algorithm or some sort of platform be able to really track um, payroll data real time or tax data within every 3 months. I think that we try to rush this data so we have it out every month. I don't know if that's necessarily beneficial. I think that if you had it maybe quarterly, I think that that could potentially be.
If you had it quarterly, the downside is that each jobs print is going to cause a lot more financial market volatility.
I think it would up front, but I think that we would begin to find a more we would it would just become the new norm. I mean, I think again, the issue that we have here is that we look at job data and we just think about how it's going to impact mostly the stock market. If we're dependent upon the job revision to make the Federal Reserve begin to decrease rates, well, that happens once a year. So I think that we need to start thinking, well, what would actually be more beneficial for individuals that are actually the ones that are trying to get jobs or getting fired? And I think to have accurate data for them to not feel like they're becoming insane, or to be able to have accurate institutions and programs to be able to assist them because it's more relevant to what they're experiencing, that would be more beneficial than to just throw out a job data for a month so that the stock market and other things can adjust, instead of looking at people as people instead of just data points.
Do you really think that the average person who's looking for a job is looking at the NFP numbers? At best, they're probably reading what the unemployment rate is to get a good idea of how tough the job market is. The NFP purpose, just from a financial practitioner's perspective, is to give us a state of the economy. The jobs is a lagging indicator, but the stock market generally tries to ignore the leading indicators if they aren't good. So if there is, so if the jobs number confirms if the other economic indicators are good or bad, it's kind of an accelerant one way or the other. So if the economic data is looking good and then the jobs numbers show it, and it kind of confirms that the improvement in the economy is real, and vice versa. Like if you're starting to see other economic data deteriorate and the jobs numbers go negative or they're bad, then it will confirm that existing trend. And it's since it is a more lagging indicator, it's kind of the confirmation signal for a lot of investors and traders to make certain capital market decisions. It also, as you mentioned, does impact Fed decisions because the Fed really has a dual mandate of inflation and unemployment. So if inflation is high, they'll prioritize that one a little bit more. And if the unemployment is at risk of becoming a problem, they'll prioritize that one more. But it's a fine balance. So if you're starting to see, like right now, we have a relatively tight monetary policy, but that's a whole another debate for a different video. And you have signs of the labor market weakening, that might be the precedent to cut interest rates. And so as a result, the market is going to react. And so a bad jobs number, ironically, might be positive for the market in that case because it anticipates more interest rate cuts. And since financial assets are priced off of um, returns above the risk-free rate, when rates go down, most valuations go up. Unless if the rates are going down because it's a real recession, then everything is all everything is kind of different.
No, what you're saying is absolutely accurate. I think that the issue that I'm just running into is that I feel that from what I'm doing, just from the research that I'm seeing, is that there seems to be just a lot of different variations of what is actually happening. And while I think that it mostly what I'm getting, I think is important is that we have to stop looking at job data as just numbers on the spreadsheet, because I don't feel like as a nation we're doing a good enough job realizing that these numbers are people that are not employed or are employed, and how we can make changes off of that. The Federal Reserve is a great point that you mentioned. If it wouldn't have been for the job revision report to come out, they wouldn't have been decreasing rates. They weren't projected to do so. And already we're seeing a stronger labor market again. And I don't believe that that is the truth of what is actually happening in the United States. But it's benefiting the stock market, it's benefiting all of these other things. I don't think people are looking at the unemployment number. I think that they begin to get frustrated when, say, the White House is tweeting, this is the best labor market we've had in 50 years. That's very discouraging to see if you have sent out 2, 3, 400 applications and you haven't gotten anything back. I get tons and tons and tons of emails or comments of people saying they've depleted all of their savings. They're on the verge of being homeless. They're not able to provide food for their family. When you start getting comments at the magnitude that I get, I almost feel like that, in a way, is a more accurate representation or survey of what is happening with the United States.
Is
I
that like
mean,
a sampling bias? Like the people who are struggling with finding a job are more likely to watch your channel?
that's what that's what that's a really great question. That's something that I think about quite a bit. I think that th- the I am more inclined that it's a more accurate representation just because of the vast amount of people that watch the videos. If I'm pulling a video that's getting near a million views, half a million views, 400,000, 600,000 on almost every labor market video I do, I think that that's more of a telling sign. Because I think at the end of the day, most individuals, if they're having a hard time figuring out or being able to get a job, they might try to find out why. But I think there's a higher likelihood that you kind of just want to detach from it altogether. If you spent all day sending out resumes and doing applications and things like that, you probably don't want to then spend your free time watching why the labor market sucks. I think that you definitely do in some ways, but I think that there is a more accurate representation of what is actually happening in the employment data. Um,
Counter, if you have a job and you're satisfied with it, you are don't have so much time to watch YouTube. And even if you do, you're more likely not to watch videos unless you work in finance like me about the job market.
which is really great. What I would say is that I also get a lot of comments of saying, "I'm so grateful that I was able to find a job," or "I'm so grateful that I didn't quit my job," or "I'm so grateful I still have one." So I am pulling views from individuals that do have jobs. I think that maybe because I do a more historical approach, maybe that makes people more inclined to watch it. I'm not exactly sure. I'm not saying that what I have is better than the BLS. I'm just saying it's hard to see that employment data is great when then I'm getting uh, 160,000 views in 24 hours about the impact college is having on the labor market. To me, that just shows that there is a cohort of people that truly are struggling that is not being represented in the data.
Yeah, I think the misrepresentation is not necessarily in employment. I think the employment numbers on an aggregate basis are probably pretty good. And with the BLS, yeah, I think it's flawed, their methodology. But the problem is that, and what I've learned from just working in finance, I talk to people about this, like, what else are we supposed to trade on? Like,
Yes.
what other data is there out there to make economic decisions? Like, that does better. Like, the data we
Which
use,
is a great, it's a really great point. And that's, I feel like maybe I've been critiquing it very heavily. I think the Jolt data is pretty garbage, but I think in terms of the CPS, I mean, it's truly remarkable that you're getting 60,000 households. I don't know what the actual how many households are actually doing it, but roughly around there. To be able to have those people answer a survey and to have trained officers and professionals be able to dictate off of that, it is remarkable. I think ultimately what I'm trying to say is that there needs to be a push that we begin to think beyond what we already have. The JOLT data is relatively new. Even the Bureau of Labor Statistics, um, It's been around long enough to be able to get good aggregate data, but I think that we have to begin to expand and to find other ways to be able to have this conversation instead of strictly just you three, and then we just kind of move on. I feel like we're getting a bit detached of the whole point of why we track this to begin with. And that's kind of ultimately what I'm trying to say, is that there needs to be more innovation on this front.
Yeah, and I think where there is the error is not necessarily really in the number of people who are employed or unemployed. I think the bigger thing that is slipping through the cracks is wage data and adjusted for cost of living. How well off are people after all their expenses? Because like if you have a job, great, but if your job doesn't pay you well enough to have a certain lifestyle that you expect to have given your level of education and training, that's where the real dissatisfaction is. And I think that's where the real gap is. I think a lot of the turnover in jobs is higher paying people being laid off and having to take lower paying jobs. And you can see that somewhat in the data, but it's not as obvious.
Absolutely. Or how many single moms are having to work three jobs, or how many individuals are having to work two part-time jobs and a full-time job, or there's a lot of these different things that I believe are just like you mentioned, getting slipping through the cracks. And the only way that I'm able to see that is just simply because of the comments. And so when you see a mass amount of people having to work many jobs, you start to really realize, wow, this is happening. You're not going to talk to someone in society and they're just going to tell you, oh yeah, I'm having to work three jobs because the labor market sucks. You're not going to find that there. So you have to find it through videos such as what we're doing, or through the labor market survey and things like that. I think if you could find a way to be able to merge it together and we could have the freedom to have conversations, that would be really beneficial, instead of what seems to be a very one-sided narrative that it fits more whatever is supposed to be happening in the economy, instead of what is actually happening in people's lives.
Yeah, and I think a lot of the news headlines outside of like the Wall Street Journal and other financial publications tend to be skewed more towards the stuff that can either strengthen or weaken their chosen political candidates'
Yeah.
argument for whether they're good at the economy or not. And that deliberately selection of the data is why people, I think, do not trust the jobs data, is because they're pushing a narrative that if you read the actual full NFP report is not even saying.
Yes.
It's more selective cherry picking where I think where people get frustrated more than the actual entire jobs report. But speaking of that, let's talk about the history of political manipulation and the jobs report, because there is a history of conveniently timed jobs reports around elections that have possibly swung elections. And the most notable one I remember is the 7.9% unemployment rate that came well below expectations right before the 2012 election. And I want to know what your thoughts were on that one and other examples you've seen throughout history.
There's an article on the Pew Research Center that is really interesting. It's about the unemployment and presidential approval ratings. But when you look at it, yes, there seems to be a continuous curveball in revisions, typically before a presidential election. You can see it with George H. Bush when he was George H.W. Bush when he was doing quite well in the polls, especially with what was happening in Iraq, and favor seemed to be in his side. And then there was a quite substantial job revision that ultimately had him lose to Clinton. And then Clinton, you can start to see that when he was up for reelection, his approval rating was starting to go down with another job revision that wasn't as substantial, but he was able to overcome it. But you can see it again. I mean, it's interesting to look at what happened with Donald Trump as well. He had a revision of 500,000 falsely jobs created. That's a big number that, interestingly enough, has not been wasn't discussed during that time. At least I didn't see it. But yeah, I mean that was kind of leading into 2020, and I think that what's interesting is to read the articles that was mentioned during this period of time. So When you read, say now, the 818,000 falsely jobs reported, when you read almost every single article, almost every single YouTube video made about it, what they focus on is that revisions happen routinely. And I think that they were marketing it as, oh, this is just a normal thing, which a revision is a normal thing. 818,000 is not a normal thing. They try to even frame it as it being a good sign for the economy. And it's really interesting because you can so clearly tell the bias in the articles, not to mention that many of the articles are the exact same. So if you go to like Forbes, I don't know, I guess the Atlantic and things like that. I'm not trying to find kind of the particular media platforms that would be based off of a political candidate, but that is what you see is that they're copy and pasting the same story. They're using the same words. The only clip that I could find when I made my video was off of.
So the question basically saying that the BLS will conveniently revise numbers to benefit the incumbent candidate, with the exception of Bush in '92.
I don't think that it is that the BLS is necessarily doing it. I think it's the momentum leading up to that point. So what's interesting is Goldman Sachs and Wells Fargo and a lot of other economists knew that the job revision was going to be substantial, but we didn't hear that. No one was talking about that until afterwards. And so when you see that, it's like, well, why weren't we setting the initiative that this was going to happen all along? Why were we saying through White House tweets and other headlines that the job market has never been stronger? I think that I wouldn't necessarily say that the BLS is responsible for this. I think that they're just simply doing their job. I think it's the societal narrative and the political narrative that we begin to form around this. One of the reasons that
Like
Reagan won was
revisions are normal. Like that's at least anybody who works in the financial markets would tell you that like that's just day to day life. But maybe
that what
that's just
is.
not well revisions.
Oh, revisions are absolutely normal. Exactly.
That's not really like conveyed that way to the general public. Maybe.
Not they're not, it's not conveyed at all. And then you can see that the way that again, I think if the tone would have been for months leading up that we're going to have a massive job revision and we could actually discuss the reasons why, we're talking about a whole different ball game. But the fact that it was not discussed, then the number comes out, it was heavily politicized, and then you don't talk about it. That to me shows that nothing with the BLS, I don't believe, but that there definitely is some sort of um, narrative that they're trying to push, which I think ruins the integrity of a lot of the data points that we're receiving.
All right. Before we wrap this up, do you have any other comments about how the jobs numbers work that would be helpful for the audience?
What I think is I wouldn't necessarily be looking at anything as face value until after the election. Again, I don't know if necessarily the job numbers themselves are being manipulated, but the tone around it and the way that it's being delivered. Um, just to say, when I research for a video, I've been able to see in recent months, especially since September, it's getting a lot more difficult to be able to find information about jobs. When I started making job videos about 6 months ago, I guess, it was a free for all. There was so much data available. And this sounds conspiracy theorist, but it is. It is. If you type in something, you can see they're all the same article. It really is trying to flood what it is that you're able to see. I think that this, again, has to go into that when you look at ghost jobs. I think that those are more important than just people making fake jobs. I think that that's a more accurate representation of the inefficiencies and the greed and the complete lack of integrity that a lot of our systems have now. So I think that it's very concerning to be weaponizing job data. Um, I would be very interested to see where it's like in a year from now when the election has wrapped up and we're beginning to set a new momentum with a new, whatever ends up happening with the election. I think that's when hopefully we'll begin to see more accurate representations of what's actually happening.
Yeah, and I think from a traders and investors perspective, um, usually the thing that matters more is not the actual jobs number, but how it deviates from consensus estimates.
Hmm.
And depending on economic conditions, the jobs matter numbers matter a lot more in economic turning points. So like when the economy is about to fall into recession or expand into recovery, or the boom is about to go up and possibly be at at a level that's going to cause material inflation, that's when jobs numbers matter because they influence monetary policy disproportionately then, and they also start to impact inflation expectations and growth expectations.
You're absolutely right, and that's why I think it's so dangerous, because I think that we are making economic decisions of things that are not necessarily accurate.
Yeah, and other data points to look at just for people who are looking at the jobs numbers are the wage data and the participation rate, so the percentage of people who are actually working, because it's only about 2/3 of people who are actually participating due to retirements, people in college, and other things like that. Damon will post the actual statistics of the chart of the participation rate for you guys to look at. But that, like, you can have, if you have a very low participation rate, you can have a low unemployment rate and still have a relatively weak job market because people have given up. But if you see the unemployment rate going down and the participation going up, that's a positive sign. So there's a lot of other variables. It's also hours worked too is another one you could look at. Like if you have people working more or less hours, that just shows you the ratio of full to part time type labor, and also like is also a reflection of the health of the economy as a whole.
Yeah, I would say do a more holistic approach on the way that you look at the data and kind of begin to form your own opinion. And if you're not interested in doing that, trust more of what you're seeing in your actual life. Don't say that that is fact, because I think that you could live in a very wealthy area and you could see things are good. But most likely, if you're concerned about this, look around and see what is happening in real life and begin to form a better approach of, yeah, I probably am actually um, struggling just as much as everybody else, instead of,
Yeah, but there is regional data. Like if you look at metropolitan areas, they do break down the inflation and unemployment rate by different regions and metros. So you can look at your local one. And I understand where you're coming from with the anecdotes, but you cannot really mix up anecdotes for data. I've made this mistake a lot in my career, saying like, "Oh, the world around me is like this," or "My preferences are like this," which means the world is like this. Whereas the data, it might be flawed, but if the thing is that it's probably more representative than your life, whether you live in a particularly wealthy area or a particularly underprivileged area, could skew your worldview, or you're in an age group that's particularly been hit, or you're in an industry that's particularly been hit. Like if you work in the newspaper industry, your employment prospects don't look as good as say somebody's working in the aerospace engineering or AI space. So be careful with translating your own personal experience.
but I'm just thinking, for someone that, if you're just going to read a headline and you don't want to actually look at the data in any way, and you just see, wow, unemployment numbers are great and I cannot get a job, I must suck, I must these things, just try to expand yourself a little bit and just look at what's happening in real life. Just I think ultimately I get a lot of super negative and very sad comments, and I just think that people are not getting the full. They're not going to go look at all of these different data points to be able to understand. They're going to
Yeah,
look at
or try
what
to
is
find
being
data that's
prompted.
more relevant to you, or realize you're not a statistic. Like
Yeah.
if I had to base my life just on the average person and the statistics on my probabilities of doing anything, nobody would do anything because the probability of accomplishing anything worthwhile is low.
Mm, yeah. Absolutely.
I think on a more positive note, we'll end that. And thank you for joining us, Damon. If you want to watch Damon's channel, just search Damon Cassidy here on YouTube. Again, he's done a pretty good coverage about everything related to the labor market and jobs dynamics. And he's done some very deep dive research on the whole ghost job phenomenon. So if labor market or anything related to that is something that you are interested in, I recommend watching his channel. And also he does good stuff about like the state of the American consumer as well.